Mr. Amey, 1 year ago you were saying that if Britain says yes to the Brexit, the pound would drop 10% to the dollar. If you compare the pound to the dollar today, it's almost 15% weaker than 1 year ago. So does it mean that the Brexit decision hit Britain harder than expected?
I think the Brexit decision surprised people a little bit more than expected, and I think that's part of the reason why sterling has been weak. I think the other reason that sterling has been weak was the central bank was quite aggressive in supporting the economy and lowered interest rates and put a lot of money into the economy. More money into the economy, more sterling around pushes the price down. So I think it was a combination of a bigger surprise and a bigger policy response.
A weaker currency can also help the economy. Did you see any effects like this?
Well, sadly, no. One of the great challenges that the UK economy has faced for a number of years now is that the currency has gone down on several occasions, but we haven't really seen a big pickup in trade. The trade deficit is still pretty similar to the one it was before. It's about 2.5% of GDP, and that is really the one that we as British people always hope to see, but so far remains elusive.
This June, there was another unexpected political outcome in Britain. The Conservative Party lost the majority. What does it mean for the Brexit negotiations?
Yes, indeed. Another unexpected result in the UK. We're doing very well on unexpected politics. I think for the Brexit negotiations, the fact that the ruling Conservative Party don't have a majority in Parliament, I actually think it makes it more likely that they have to do a deal with the Europeans. If you look at the other parties in the Parliament, the other parties are all towards doing a deal. So actually, I think the fact that they don't have a majority makes a deal and a less confrontational exit, a smooth exit, more likely.
Now the investors are interested in how this affects the financial markets. What do you think?
Well, the financial markets are caught by two differing forces. On the one side, we have a weak government, doesn't have a majority, so the markets are worried about, is this government going to survive? Will it survive the year? Will it survive 12, 18 months? And they don't know, and they don't like unexpected political outcomes. On the other side, you could take the view that the weakened government, a smoother Brexit potentially, and less confrontational politics could actually be quite good for the economy. And of course, don't forget, one of the other things that the vote told us was the general public have had enough of austerity. So it's possible that we could get more government spending. So on the one side, you've got more government spending, a smooth outcome for the Brexit, which would be good for the economy. On the other, the politics is still something that worries us all.
But how should investors position themselves in this environment?
So I think the most important thing to do is to recognize that both outcomes, more difficult politics, another general election, is perfectly possible. And think about that on the one side, and think about the potential for more government spending, irrespective of who is in power, on the other side, which would be good for the economy. So we would argue that what investors should do is they should think about an economy which is potentially going to get some boost from higher public spending. It does have this risk of heightened political uncertainty. So keep some powder dry, but recognise the underlying economy continues to do quite well.
And where do you see the pound in the next few months?
So the pound is caught with the same two challenges. On the one side, you've got potentially some government spending stimulus and the political uncertainty. So our suspicion is particularly relative to the US dollar. We don't expect a big move on the currency here. The currency will still move significantly in the event that we get either a good or a bad outcome. The currency is the most sensitive part of the UK financial markets to political outcomes.
The Brexit negotiations just started this week. What are the next important events in Britain's politics that investors should have an eye on?
Well, the next 6 months is going to be fascinating, and I think really the next 6 months will tell us a lot about how the UK political system and the Brexit negotiations are going to go for the next few years. We should learn a lot of this by the end of the year. In particular, we have the bill, the so-called Brexit bill, to be negotiated between now and the end of the year. If we can negotiate that bill successfully, that would indicate there is some good relationships between the Europeans and the British and would make a smooth outcome, a smooth Brexit more likely. And the other thing we should know by the end of the year is whether Theresa May will still be the Prime Minister. There is a big Conservative Party conference in October, so realistically by then the Conservatives have to decide if they want to keep her as their leader or go for somebody else.
So does it mean by the end of the year there will be less uncertainties in the market?
Yes, and our base expectation is that there will be less uncertainty by the end of the year. Our base expectation is that we do some deal with the Brexit negotiations. And actually our base expectation is that Theresa May will probably not be the Prime Minister, but that it will be a relatively smooth transition to a new leader.
Mr. Amey, thank you very much.
Thank you.